Hello and welcome to this video on risk management techniques. In today's rapidly changing business environment, managing risk has become more and more important than ever. As a trader or an investor, or both of them, coming up with a risk management technique, or let's say risk management techniques, is mandatory for you in order if you want to keep your investing and portfolio safe. In the previous sessions, I talked about the psychology of the market and the risk management on the chart, how to do that. But today's video is mostly about that psychology part of the market, mixing up all the data that we have and bring it into a box, that beautiful box that we want, like a Valentine box, make it beautiful, shiny, and try to help our pocket not to be robbed, not to be destroyed. And in the end of the journey, of course there won't be an end to it because it's an endless market, endless opportunities, but let's say in the end of the day you're gonna make good money, good deals, even you can make it as your first job. Why not? So long story short, imagine how much drinking water is important to humans' body safety and health. So I could say water is equal to technical and fundamental analysis, but how much important risk management and risk management techniques are. It's like the oxygen to you. So see how much important that is? Let's waste no more time and dive right into it. I'm here to tell you different techniques for risk management. Beside the techniques I've told you on the screen, and that was the doing part of the job. So this is the thinking part of the job. So don't go anywhere, fasten your seatbelts, sit tight. You're gonna have a lot to discover. First, let's talk about risk identification. The name is amplifying the meaning of it. It means that to identify the risk, what the risk really is. Let's put it this way. There are two types of risks. One is internal, second is external. What is internal? It means inside the system. It is related exactly and directly to your technical analysis. If you don't identify the risk, it means that you didn't understand the right position, you didn't get a right trade, or you didn't buy an asset in the right time in terms of investing, or if you want to hodl something, or say let's hold something. It means that you didn't. Let's make an example. I talked about this previously a lot, and we talked about everything, and there's nothing left and nothing untold. But let's make an example here. If you cannot determine support and resistance, or let's say supply and demand zones correctly, and then you're gonna enter a trade in between two ranges, trading range, you're gonna enter it in between two ranges, and then the market tends to go up, and you realize it correctly that the market wants to go up. But before going up, it has, as we know, the market is not always going in a line. It goes up and down. It's like waves. And then in this up and down, in this higher highs, higher lows, in some places it's gonna take your stop loss and then go up, and it will hit your target. But you're gonna keep thinking with yourself, what did I do wrong, and why it went and hit my target, but I couldn't take the trade correctly? It is because you didn't identify the risk correctly, and you didn't identify the situation correctly. Second, it's all about the external factors which can increase the rate of the risk. For example, like news, like a pandemic coming to the world, like COVID-19, like war. Lots of things. You can check all of those. Previously, I made a video which I'm gonna leave a link above here and down in the description about fundamental analysis basics and crucial websites to check the news and everything about cryptocurrency. And you must always, before starting your trading day, check those news and keep yourself updated in order to identify the external factors. For example, if you hear that each month there's going to be a meeting in United States of America, and they're going to decide that they want to increase the interest rates or not. So that can affect the market. But you should not trade with it, as I've told you previously. You should not trade with it. You have to make decisions based on both fundamental and technical analysis. That's in the end of the day, it means identifying the risks both with internal and external factors. Second risk management technique is risk assessment. Once you pass the first stage and you could identify the risks, now you have to assess them. How to do that? You must encounter, okay, so if I want to take this trade, or if I want to buy this asset or sell this asset, whatever you want to do, what are the consequences? If I take this trade or I do this investing, the risk is going to happen eventually, and it's going to hit my stop loss, or I'm going to lose that money. What are the consequences? What are the impacts? Well, how I'm going to deal with it? Can I tolerate it or not? Because if I can't, let's imagine I invest $1,000 in a trade and I want to enter a trade, a long trade, and I can tolerate losing $100. That's the amount of money I can tolerate to lose. So that means assessing our risk. Third step is risk mitigation. After two first steps, now we can measure the likelihood of those losses that can occur during our career or in that particular investment or trade. Let's make an example. For example, you want to buy and hold, or let's say hodl. The reason I'm always saying this or that, hold or hodl, is that because you know the meaning of hold. But in the financial market we say hodl. We shouldn't risk on a dead horse. Isn't it true? Of course it's true, because a dead horse cannot even walk. Imagine it wants to race. So in this particular example, if you want to buy or do an investment on a particular token or coin, or let's say altcoin or even Bitcoin, you must check the historical data, you must check the news, or even if you want to take a trade, when the market is with high volatility, especially in the beginning of your career as a trader, you should not take trades. It's like the sea. You know, when the sea is going crazy and there is a hurricane going on, everything is not okay. You cannot see through the water, but when the sea is calm, the water is crystal clear, it's beautiful, it's calm. You can go tan your skin on the beach, and you can just chill out, right? So chill out when the market is calm, and avoid trading in high volatile market or even a really low volatile market, because that's dangerous too. Why? Imagine on the weekends, although the cryptocurrency market, unlike the stocks market, forex market and the other markets, is 24/7, but I myself and lots of traders out there, we do not trade on the weekends. Why? Because there is so much of low volume going on in the market, and market makers can come in the market and with a really tiny amount of money, or let's say asset, they can just, of course the name implements making the market. And for example, you want to take a long trade, and of course, as you can determine the support levels, the others can do too, especially the ones who are willpower within this market, like the cryptocurrency exchanges, like the whales. Whales, here's open a bracket. It means an individual or an organization possessing a lot of amount, a vast amount, big amount of a particular asset, or let's say assets. And we call them whales because if they bring it to the market and they sell it off, or they buy a high amount of it, they can change the direction of the market, or let's help it to help the market to change direction. So to sum it up, we shouldn't trade, especially in the beginning of career as a trader. We shouldn't trade in the really high volatile or low volatile market. We shouldn't invest or buy an asset when the world is going crazy. For example, there is a war going on between Russia and Ukraine, or there is a pandemic like COVID-19 going on in the world. So you have to wait for the sea, for the hurricane to calm down, and wait for the clear blue skies. Next is risk monitoring and review. After past three steps, now it's time to review and step by step follow up our trade, or let's say investment. In the previous episode, I talked about completely how to remove and trail our stop loss and how to come out of trades step by step and let's say make our trades risk-free. It is exactly about that. So do not become greedy. You cannot, there is no one, believe me, no one in the world who can determine and understand the exact point of the market turn points, or let's say market reversals. So no one knew that the market will just like let's say Bitcoin market, like the Bitcoin price will just drop off from 69 something dollars, maybe it was 68. You can determine areas, as I told you before, to determine support and resistance, let's say supply and demand zones. That's why we don't determine them with lines. That's the reason we determine them and mark them with areas. It means that we are guessing an area in between A to B, or from B to C to be the area of our prediction, but we cannot understand the exact point. So in this case, we shouldn't become greedy. If we want to invest and we want to, for example, buy, let's say, Bitcoin at the price of 15K, we wait for it to reach 200K. It may take a decade or maybe 2 years. It may even happen in a month. Who knows? But when the market is, you must have a plan, which I talked previously a lot about it, and I will talk about it a lot in the future. But keep it in mind right here, right now. You must have plans for yourself. Plan A, B, C, all the way to Z. It means if you enter the market at A, at point A, you must have an exit plan on point B, then another exit plan on point C, then another exit plan. So you must divide it, divide your profits, and bring your money out of the market, because it's a risky market. If you want to say, oh, it's good, let it go up, let it go up, let it go up, let it go up, and then you find yourself that you didn't even grow your money and you've lost some of it, or let's say all of it, and made yourself call margin. So now that brings us to number 5 technique in risk management: scenario planning. I talked about the fact how to do things, how to determine the risk, how to measure it, blah 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 blah. But how to plan the scenario? Let's make an example. You've made a prediction and you made a trade for a long trade, and you see that the market is going up, and it's going up really good, really well. But at a certain point, for example, from A to C, and at the B, at the point B, in the middle of the way, or let's say the third of the way, somewhere in between, you see that the market cannot go up, and you see indications, lots of indications that the market is about to reverse. You shouldn't insist on your previous analysis. Or for example, you are making your trades and you're going long, or let's say you're going short and everything is going crazy beautiful and you're making good money, but you see, for example, something happens in the world. There is a war going on and you see some sudden movements in the market. You must be aware and you must be cautious. And how to do that? Of course, I've told you before in technical analysis. Check my previous videos, episodes, and seasons. Last but not least is risk communication. In order to do this, you have to be in the community. How to do that? You can use Twitter, Facebook. There are tons of, you can even use the TradingView platform or a CoinMarketCap website, which I talked about those a lot previously. I don't want to dive into that right now, but you must be aware of things. For example, if you want to cut off yourself from all the news out there, because I've heard lots of people that say, we only trade with fundamentals. We only trade with technicals. We don't want to trade with fundamentals. But you have to trade with both of them. It is not up to you to say, okay, I don't. It's like, okay, I only want to brake my car with handbrake. I don't want to use pedal beneath my foot. Or there are like thousands of examples like that out there. but you have to use a combination of those. So fundamental analysis here, you go to the community and you hear that, for example, some asset like Ripple, gold, the oil price is going down, the oil price is going up, there is a war going up in the world. I can imagine there was this hearing on XRP Ripple project, and Ripple won that case in the court of law. And I can remember, still I haven't seen anything like that. It was last year, I think. I haven't seen anything like that going crazy in short time frame like that. It was, you know, the Ripple was going to the moon. And I couldn't even see what is going on. You know, the candles were going out of my screen. It was crazy. So you must be aware of these things, especially about if you want to be successful, especially about the things that you are used to trade on daily basis, or you have invested before, or you are about to invest. For example, let's make another example. If you want to invest on Bitcoin, if you want to invest on altcoins, you must know that what is happening to Bitcoin, because they are all alternative to Bitcoin. And most of the time, let's say more than 90%, 5% of the times, they are following up the price of the Bitcoin. So you must have a good analysis and information about Bitcoin, then do your, so let's put it this way, if you want to invest or trade on altcoins, your job is going to be twice harder, because first you have to do all of them on Bitcoin, then bring them all to the altcoins. Because if something happens to the Bitcoin, it is going to be more or less happen to the altcoins too. So you see how much important this stuff are? Believe me, it's as much important as the oxygen going to our lungs to keep us alive. If I want to tell you this season, especially this season, third season of this how to become a trader course is more important than the 2 seasons behind it, I'm not exaggerating. So watch all of them carefully, especially this season. If you are already a trader, okay, this is for you. If you're not, you have to watch those 2 seasons first and then come watch this, because that's gonna make no sense to you. Combine all of these ideas together. If you have any questions in your mind, just feel free to ask me down in the comments. I would be glad to hear you out and get back to you as soon as possible and answer you with the best possible answer. So did you like this content too? If you really like it, please hit the like button, share my videos with your friends who are keen to learn all about this messy world of trading, especially cryptocurrency, which is on fire nowadays. If you haven't subscribed to my channel yet, do it right away. And if you don't have any questions at all, just help me out to make you become better, and even help myself become better and making better contents for you. Thank you for watching. See you in